What's going on, everyone? So in today's video, I'm going to go over the S&P 500, the NASDAQ, the IWM, Russell 2000, SPY, the QQQ, the Bitcoin, Ethereum, crude oil, and all of these other stocks that you guys wanted me to cover in technical analysis. So let's get right into it. So if you were watching the SPY all day, I gave you guys these resistance levels, 416.34 and 417.04. Okay, so let's look at where the SPY opened up today. We did not even cross 417.04. We were trading between these resistance points the entire day. And if you did draw out the resistance level that I had, you can see that we had multiple touches at this lower level. And the lower level is also where I told you guys that you could have added to shorts on April 20th over here when we crossed down below. So this level has been working out absolutely perfectly. Okay. And look, you had multiple opportunities to just continue adding to shorts as we continued touching this level. Even if we were to cross above this lower level and start touching above the higher level, you would have a stop loss a bit higher than 417.04 to around potentially even like 417.40, 417.50, depending on your risk tolerance. But we didn't even need to, you didn't even have to worry about that issue. We were trading below this lower level the entire day. And what ended up happening is towards the end of the day, it broke through support beautifully. And not only did it break through support, we started to teeter, and we started maybe even beginning to retest the support at 410.63. Okay, so not only did you have multiple opportunities to add to shorts along these resistance levels and along this trend line multiple times throughout the day, you also had another opportunity to add to shorts as we crossed below the support level at 413.70. Because as you know, prior support, once it's broken, becomes resistance. All right, so that's where we're currently at. These levels have been working out perfectly, and if these levels have been helping you guys, please drop a like, drop a comment, turn on the channel notifications. I don't have all of the cool, the little ding, look, oh yeah, follow my, I don't have all of those graphics yet, but please put on channel notifications, share this video, and share my channel with all of your loved ones. I help people make money, and I hope I've been helping you guys make money and, make better trading decisions as well. All right, so that's the SPY on the 15-minute chart so far. So I zoomed out real quick because the next thing that I want to show you guys is the October 2019 level on the SPY. So if we drew a trend line from October 2019 and we connected it on September 1st, and you could have connected it over here on February 12th as well, we would get this beautiful level of support when you zoom in into that support. So you were to see that if, wow, that doesn't even make sense. But if you would see that if we crossed above, when we crossed above this level, that triggered a huge bull rally. So we crossed above, and as you know, when you cross above a certain resistance level, usually what tends to happen is you want to retest that level to see if it holds, and it held. And then it triggered an amazing bull rally all the way up to 14.17 and 58. So essentially, that's what happened here. So now we need to look at that level as support. Okay, so now if we go back to the 15-minute chart, here we are, 15-minute chart. Okay, we filled this lower gap already, and the only lower level of support is going to be that level here. All right, so the key levels of support on the SPY for tomorrow are obviously going to be this low here at 410.60. We can see that it's been acting as support throughout this entire time, and multiple touches down here. So 410.60. And then the October 2019 level, the support is going to be 409.42. All right, so those are going to be two key levels of support that need to hold for the SPY. All right. Obviously, then the resistance is going to be 413.70. If we cross above 413.70, then, you can go long against that level, similar to what you've already been doing here. You could go long, have a stop loss a bit lower, depending on your risk tolerance, and yeah, just trade the market either up or down, depending on what you want to do. Once you have levels, it's literally just a matter of execution. Yeah, so especially with trend lines that are not a horizontal line, like not a straight line, right? So these trend lines act as resistance. So you would need to draw them out. You would need to recreate them on your own chart. And that's another reason why I had two resistance levels on the chart. I had like 413, 60 something, and then 417. So you had a range of resistance. So I did that for you guys. I hope that helped. But it doesn't look like we're going to be approaching any true, diagonal lines of resistance on the SPY. So the real clear resistance so far is going to be 413.70, and then these two support levels to the bottom. All right, so now let's look at the daily chart on the SPY. Let's see what's going on with the MACD. And yeah, look at how overextended this is. This is so overextended. This looks like a huge parabolic run. This hasn't even retested the 28.2% Fibonacci level, which is a very, very important level to usually hold. Either the 28.2% Fibonacci level or the 23.6%, sorry, or the 38.2%. And it hasn't even touched, look, it didn't even touch the 23.6% Fib level yet, or the 38.2. So the fact that we're still trading up here, it means that we're very, very, very overextended. But that doesn't automatically mean to just short it. As we can see, if you went short on April 20th, the next day we went straight up. So like I said, it's not a swing trader's market. One day you might think that we're bullish, the next day we can become bearish. So yeah, the MACD is still extremely oversold, which is a very, very, very bullish sign. Again, we're oversold on the MACD, nearing support. We bounced off of resistance, and yeah, that's essentially it on the SPY. So these are the levels that I need to hold. Yeah, another really good trading day on the SPY. All right, so now this is a 15-minute chart of the NASDAQ, the QQQ. All right. I said that the resistance level to watch was 339.33, and the support levels to watch were 338.22 and 337.27, right? You guys can see that. So, I like to watch the 15-minute chart on the longer time frame. I usually scalp on the 1-minute chart, but, for the sake of just showing you guys how these levels work out really, really well, the 15-minute chart is perfect. All right, so yesterday I was saying that, we needed to see a close. We need to see like multiple closes above these levels for you guys to go long against them. All right, but that it happened at 10:30, right? We closed on the 15-minute chart at 10:30, right? So if you were buying puts against this resistance level, right? What I mean is when you buy puts against a certain level at resistance, you need to have a stop loss higher than this resistance level, because they will deliberately go and try to fill your stop loss. They will try to shake people out. If you go in heavy and try to buy in as many puts as you can, if the stock starts going against your direction, so say for example right here, look, this is probably what happened to a lot of people. So right here, you bought into puts. Okay, we touched this level. You grab puts at 10:30 on the close, right? As we approach this level, whatever. By 10:45, we were all the way up to 339.89. All right. So many people probably lost a lot of money if they sold, right? People were down on this position at this point. But what you have to do when I say, you need to have a stop loss a little bit, you need to give yourself wiggle room deliberately. Okay. So you don't automatically buy with a huge position. This is your starting position. The resistance level has to be your starting position. You put in a little bit of money. All right. Because at this point, especially with shorting in this market right now, we're very, very, very bullish. All right. So on the support side, when you're buying calls, and on the resistance side, you have to put in a very small amount of money that you're not going to become crazy about if you start losing. All right. So you buy in a small portion of your puts right here at 1030. Your level that you would sell and that you would have to have as a stop loss is this wick right here at 339.97. You can see that it is the highest wick right here. It acts as resistance. You know, it was acting as support over here, all throughout this area. So if you gave yourself that wiggle room, less than $1 away, all right, what is that? So if you were to buy it at 339.33, your risk would be another 60 cents, 64 cents, all right? In exchange for what? For at least down here, or potentially a break. So your risk reward on the trade would be it would be amazing if you had scaled in to this level here. If it crossed above this level here, then you sell. You're not thinking about anything else. You automatically sell, and then you start looking for long positions. But that never happened. We never crossed above 339.97. Right on this wick at 10:45, 15 minutes after you hypothetically entered the position. At 10:45, the highest we reached was 339.89, which is lower than this level. And then over here, again, we still didn't even touch that level. We were at 339.85, which was the high. So this is what I mean. You need to give yourself a wiggle room. And then if you are wrong and it crosses above this, you need to start looking towards longs. But these levels have been working out so perfectly that there was no real reason over the past week and a half now that I've been making these videos. There was no time where you needed to, you know, switch your bias on the fly. All right. As I'm making this video, Bitcoin is puking. Holy crap. Anyway, we're going to get to you soon, Bitcoin. Oh my God. Yo, that's crazy. All right. Sorry. Wow. All right, yo. Sorry. All right, yeah, but you could have traded the NASDAQ with a stop loss a bit higher than resistance. All right, so say, for example, you put $500 at 339.33 for contracts maybe 2 or 3 weeks out. By the time we get up here, your contracts are down maybe 10 or 15%. Probably, right? You could have bought another $500 worth of contracts over here of puts as we approached this level, because that is your hard stop level. This level right here at 339.97, hard stop. Just make it 340. All right, 340 is your hard stop. You could have bought another 500 as we approach that level. And if you had held, how much would you have been up? But yeah, regardless. So if you didn't want to do that and you just wanted to wait for momentum, all right, you could have gotten in and entered on this candle here at, you know, 1300 at 1 o'clock. And then you could have literally what you could have really did to be super safe was you could have waited for us to break 338.22. 338.22 was this level here. Could have bought puts as we were falling, and we never even retested it. So you would have been completely fine. You buy short if we break support. And especially on a right now we're like, it's bullish, but we're very overextended. So again, you could have done the same concept. You could have bought puts as we cross below 338.22, or you could have bought puts as we cross below 337.27, and we just flushed down for an hour straight, and we ended up touching all the way to 334. So you could have gotten into puts. You could have scaled into puts all the way up here. I gave you guys the resistance levels. But then it's just a matter of getting out of your own way and not overthinking the trade and not automatically thinking, oh my God, like I'm down 5 or 10% on this position. I'm down $50. I don't want to lose more money. But you have to, if you only have $500 to play with, you need to scale into your position. You can't automatically just, you know, buy puts all in at this resistance level, because you have to realize that they are going to come and bring it past. Most of the time, they're going to bring it past resistance, especially on the NASDAQ right now. The NASDAQ is the strongest indice. It's been rallying the strongest, okay? So deliberately, these market makers are going to try to get a lot of people stopped out. And that's, what we saw here, like multiple times here. If people wanted to continue to short against 339.33, they stopped people out multiple times. And then over here, oh my God forbid, you were short here. You saw friggin' 1, 2, 3 closes on the 15-minute candle or 15-minute chart above this resistance level. But if you were looking at this level here at 334, this wouldn't have scared you because you were already mentally scaling into puts along this level. So that's what I mean. You have to buy puts and give yourself a wiggle room with whatever you're doing, either calls or puts. And today the puts worked out beautifully. So yeah, that's basically it for the Qs on the 15-minute chart. Let me write out the new support levels for tomorrow. All right, so the levels of support on the QQQ are going to be 333.97 and 332.95. So 333.97 was the prior low right here at this wick, and 332.95 was this level of support that I have, which is the ledge to the next gap. So then if we cross below 332.97, then this low right here, 332.94, then we can even fill this gap here to 331.85. So this entire gap can potentially be filled here if we cross below this level. So those are the levels to watch for tomorrow. TradingView is acting really weird. Give me a second. All right, basically those are the levels of support, and the resistance is the March 1999 level at 337.30, which for some reason it's not showing. So there, that level right there. Let me try again. So this level. Yep, see it every time I do this just vanishes. But just take into consideration that it's 337.30. One more time. Yep, it just goes away. I might have to just delete my history and cookies and all that other stuff. But oh, perfect. 337.30. Look, before it goes away, 337.30 is resistance for tomorrow. All right, so if we cross above that, very, very bullish. But if we fall, very, very bearish. So those are the levels. You can trade against these levels. Yeah, that's it. 330, and this was the prior low right here. Let me just draw that out real quick. Boom. All right, so those are the levels for the Qs. Let's look at the Qs on the daily chart. Okay, so this is now extremely, extremely oversold on the MACD, which is a very good sign. Let's look at where we are on the fibs. Much better than the SPY, because at least we at least touched the 23.6% fib level. But the 38.2% fib level is down here at 328. So yeah, let's see if that happens. 328 would be an interesting drop. But yeah, for now, those are the levels of support and resistance. So take that into account. It's also the right here around 330 is going to be the March 1999 level. And again, what we've been seeing is the March 2020 bottom. Once we connect from the lows, right here from March, we connect all the way here. This was acting as clear resistance. So yeah, like this is going to be a very, very major level of resistance moving forward. The March 2020 bottom level. All right, so there's the Qs. The IWM was extremely interesting today because we opened up and we were very, very bullish all throughout the day. We crossed above resistance, but that level of like if you were to buy and cross above resistance, whatever, your stop loss would be right here where the ledge to the gap would be right here at 224.51, right? But we clearly crossed above that. And yeah, the IWM was at multiple levels of resistance. But what's most interesting though is that we traded perfectly on this lower trend line here that I drew out. And that was acting as beautiful resistance as well. So I didn't give that level because, I just didn't think that would be as major of a resistance level for today. Clearly it was. So yeah, so that worked out. And yeah, if you were to go long against this, hopefully you didn't. I mean, yeah, I mean buy puts. Sorry, yeah, if you were to buy puts against resistance, hopefully you didn't here. But yeah, it was way cleaner on the SPY and the QQQ. The IWM was just giving way too much strength. You have to take that into consideration before you do try to buy puts. So you could have waited for it to cross down below, and yeah, these levels are just literally working out perfectly. But you could have waited for it to touch 220.85, which it did. It touched exactly on 220.85 towards the end of the day, and it bounced up for almost 3 points. So that was a nice little move. And you didn't even need to, what did it fall? The lowest at 220.78. So it fell 7 cents away. You didn't even need to have that much wiggle room to the bottom, to the downside, which is the best part. So that would have worked out pretty well. Usually what you need to take into account is when a stock moves like in a very, very bullish way. It was strong throughout the entire day, but then it had a huge flush the same day. What's usually going to happen is we're going to retrace back to at least 38.2% of this flush down. So this is probably, this looks almost close to like 40 or 50%. So you could have held for at least 30% of this move to the upside, and that would have been a nice little scalp play as well. But the IWM was not as clean as the SPY and the QQQ. So yeah, those were the levels. So here are the levels of support and resistance: 220.85, 218.12. You could also add 217.65. And then the resistance is still the same for today, 224.09. So there is the IWM. The IWM on the daily chart is oversold, trading around support. All right, so that is a good sign. Let's check out crude oil. Crude oil, it bounced exactly off the 20 EMA, which I was talking about how the 20 exponential moving average was the support level for this entire move up, and it's still acting as a level of support. But the caveat now is that the 10 SMA and the 50 SMA are acting as resistance to the upside. So we need to keep an eye out on crude oil. It's now beginning to be oversold on the MACD, which is potentially a good sign for it to continue upward. So yeah, let's see how crude oil reacts. Crude oil usually also determines the direction of the market. So if crude oil starts to crap itself, then the overall market is going to look bad as well. Now let's check out the dollar. The dollar is still trying to break around this level here at 91.37. You can see that it's wicked above a few times, but we haven't had multiple clean closes above this level. So this is a resistance level, and then 91.6 is another resistance level on the dollar. All right. The US 10-year yield is sitting at exactly the 50 simple moving average. It's sitting at support essentially. So if that breaks at 154, that is going to be very, very bearish for the US 10-year yield. We are extremely oversold, but as you can see, the MACD is now beginning to puke a bit, which means that the momentum has obviously been shifted down. So let's just see if we can reverse at these levels here and at these at this low. That's going to be pretty interesting to see on the US 10-year yield. All right, while I was recording and while you guys were watching this video, Bitcoin started to completely just crap itself, and lots of people probably lost their life savings while we were while we were recording. So let's go ahead and see what the hell happened with Bitcoin. So yeah, like I was saying, Bitcoin. Sorry, ooh, what am I deleting? All right, like I was saying, so when there are huge wicks on Bitcoin, those wicks again, they tend to be filled. And while we were recording the video, the wick got filled and it started even falling down lower to the downside. So yeah, that's devastating for a lot of people. If a lot of people decided to go long Bitcoin along these levels, oh, that's another reason why I didn't, say, hey, buy into Mara, buy into Riot. Look, we found a support, because we tend to always fill these wicks. All right. So now the level that needs to hold on Bitcoin is going to be this 61.8% fib level at 50,189. So that level needs to hold. We can see that we bounced close to it at 50,450. But now this is going to be the next level of support right here at that line. If we cross below that, then I'm going to have to, do some analysis on Bitcoin. But then the next, horizontal level of support would be the 78.6% fib at 47,000. But that is essentially pretty low. So, the fact that Bitcoin is falling, but then Ethereum, wow. All right, let's look at Ethereum on a 15-minute chart. Yeah, Ethereum started to fall as well alongside Bitcoin. So Bitcoin, in correlation to where Ethereum is down here. Okay? So the fact that Ethereum is this high is a very good sign for Bitcoin in the long run, in my opinion, because that would mean that Bitcoin needs to catch up to Ethereum. So if Bitcoin were to catch up to Ethereum, obviously you can see that Ethereum made new all-time highs. And what would that mean for Bitcoin? In the very least, we would at least crossed above 57,600. We are a long ways away from that. And this is a potentially a $15,000 move if we were to create new all-time highs on Bitcoin, 14,000. So that is a pretty, if you were to try to trade this according to how Ethereum is moving, that is to give me trade. If you're willing to put some money in and not worry about where it goes, that can be a 15,000 of 5,100. That's at least 15%, 19% gain if Bitcoin hits new all-time highs. But yeah, we just need to watch these levels, 189, and then 47,000 on Bitcoin. Ethereum needs to still hold above these levels of support over here. These two levels right here at 2341 and 2316. If those levels hold on Ethereum, then that would be amazing. As you can see that the MACD is oversold, crossed above resistance, and it's about to cross above the MACD line. Bitcoin, it's puking downward, but we are now extremely oversold. And overall, I just love crypto. I love blockchain. I think that Bitcoin and Ethereum, all of these things are the future. We just need to trade the levels. Don't fall in love with anything. Everything can go sideways overnight. So that's how I think about stuff. But yeah, there's the 28-minute analysis of the major indices: Bitcoin, Ethereum, crude oil, the dollar, SPY, the S&P 500, the NASDAQ, etc., Russell. So now we're going to go over the stocks that you guys wanted me to go over for technical analysis. So Apple, real quick, I just wanted to go over Apple. Obviously, this is going to key off directly on how the SPY and the QQQ are doing, right? Usually when these are green, Apple does well, period. All right, so now Apple, in the short term, it needs to hold above this low right here at 130.63. And it also needs to hold above 131.30. Okay, we can see that it's also extremely oversold on the MACD, which is a very good sign. The fib level retracement would be very similar. This is probably only a 23.6% fib retracement. So, keep an eye on Apple. Also, if Apple starts to tumble, it can pull down the rest of the market as well. There's earnings on April 28th. Definitely keep your eye on Apple. Do not hold, I personally do not ever hold anything into earnings, especially not options. And the only time that you should feel comfortable with options a bit more is if you were to buy calls or puts much further away, where the implied volatility of the option price does not kill your price. So you could have bought an option over here, but if you were to buy that same option up here, that doesn't make sense. But basically what you need to do mathematically is you need to buy the option at least 7 days before earnings start. You should never buy options the day before earnings, because implied volatility even if you were to buy, say for example, I'm over here, it's trading at 132. I want to buy the 135 calls. If Apple ends up breaking past like 139, sometimes because the implied volatility is so high and you're holding 135 calls, you end up not making any money, or you make a very, very small amount of money because the implied volatility on the option price is already baked in, and you end up not making that much money. All right, so now let's look at Tesla. Tesla, you can see that it has not been able to break above this level of resistance. It also has earnings on April 26th. Next week is going to be really, really, really crazy. Yeah, so you can see that it's up in the post market. I'm not sure why. Maybe it had news, but it has earnings on April 26th. So usually what happens with larger stocks in general is they tend to run up into earnings, and depending on the stock, they fall either the day of the earnings or right afterwards. So usually the best time to buy into earnings and get into an earnings play is at least 7 days prior for the run up. Or at least, you sell before earnings. You never hold through the earnings. So yeah, there's that on Tesla. What would need to break for tomorrow is this trend line here. So obviously it would need to break the high at 753.77, but then the trend line that would need to break is right here, this trend line. It would need to break above 772 for it to continue upward. But that would be a monstrous move. That would be a $60 or $70 move. Not looking too good for Tesla, especially since the rest of the market is at resistance. So I'd be very careful about Tesla. The good thing, though, is that it's trading above the 50 simple moving average and the 20 exponential moving average. So those levels are acting as support. And those levels need to hold around 693 and 697. So yeah, that's what we're looking at on Tesla. All right, car lots. So things are starting to tighten up again. This is a descending wedge, a falling wedge, sorry. And there's multiple different stocks that we've been looking at that have falling wedge patterns. They're supposed to be extremely bullish patterns. The support level that needs to hold is 642. And we can see that we were extremely oversold on the MACD. We bounced off of that level of support, and now we're testing above these levels, and we're testing resistance. So the resistance now that needs to break is the 10 simple moving average at 730, and then the 20 exponential moving average at 747. Also, if you just clean that up real quick, the level that needs to really break for tomorrow is going to be 735, which would coincide with this upper trend line here. If we can cross above that, things can be very, very bullish for car lots, especially since we have earnings on May 10th. If we see a run up into earnings, that can be very bullish for car lots, but those are the levels for that. All right, Mara, obviously it's heavily dependent on where Bitcoin is going to go. And the fact that Mara is now, it's probably going to fall even more in the post market, but that's completely fine. The level that I was looking at, that I shared on Twitter was 32.49. All right, so clearly we fell below 32.49. It needs to reclaim this for it to become bullish, and that's really the only level. Aside from that level, then the next level of support is going to be this level here at 29.57. But aside from that, it's really just keying off of how Bitcoin trades. If Bitcoin is not trading well, then these levels of support and resistance don't really mean anything. But as you can see, we're also extremely oversold on the MACD, similar to the other large cryptos. But yeah, these are the levels that need to hold. I would wait before getting into Mara again. I would wait until we cross above 32.50. So yeah, there's the levels for Mara. All right, so this is Boeing. Boeing it's starting to become very, very interesting. So as you can see, we fell outside of the lower level of the Bollinger Band, which is a very bullish. It's not bullish, but it means that we tend to see a reversion to the mean, and the mean is the middle of these two levels of standard deviation. So that's why we had a bounce off of this level of support, and the support level that needs to hold is 230.21. But tomorrow, if we can cross above the 50 simple moving average on Boeing at 238.56, then, Boeing can start. Also, if we can cross above 240, if we cross above those two levels and above 240, Boeing can start flying. No pun intended. So yeah, I was waiting for that. I was waiting for that joke, and I made it. Okay, so yeah, there are the levels for Boeing. If for some reason we even cross above that level, the next level of support or resistance is going to be 243.30. So if we can cross above those two levels and we reclaim this trend line from back in February, then that is extremely bullish, and things can really look good. But again, it really depends on the broader market. All right, EHTH. So the level that needs to hold on EHTH is going to be 65.32, which coincides with the 38.2% Fibonacci level. And then the level of resistance is the 22.6% Fibonacci level at 69.21. If we can hold above that level, especially since we're oversold on the MACD, things can look pretty good because there's also earnings on April 28th. If we hold above that level, we can see a potential run up into earnings, and then I would not hold overnight or into earnings. I would sell. So yeah, those are the levels for EHTH. One bearish sign though on EHTH is that we are trading in a downtrend. So from April 9th, every time we've touched this trend line, it's failed to cross above. But if we do cross above this trend line, it can be it can be an explosive move upward. So yeah, the support level needs to hold on EHTH. So this is EAT. This is a Canadian company. But yeah, there's no point of, in my opinion, there's no point of trading stocks that look like Legos or Roblox cubes or whatever the hell this is. Like, there's so many better stocks to trade. This is extremely illiquid. It barely moves. The only good thing is that it's cheap, but don't don't get sucked into the fact that, oh my God, it's only 2 cents. If it goes to 4 cents, I make 100%. These stocks are really, really bad, and you're better off not putting your money into stocks like this and trading, better stocks and learning like the ins and outs of actually, trading a liquid stock, not something that remains stagnant between 20 to 25 cents for what is this, weeks. For over a month, it stayed like this. For weeks, it stays between 5 cents over and over and over again. So this isn't a good stock. EAT. All right, so this is UMC. All right, so the level that needs to hold as support for this lower level of the wedge, because this is a rising wedge. Rising wedges usually tend to be bearish patterns. So the level that needs to hold for tomorrow is going to be 950. All right, but if above the level of resistance for tomorrow is going to be 993. And that is a little bit higher than today's high, but that would coincide with a break above this level of resistance of the rising wedge. We can see there's multiple touches, and every single time we've been touched, every single time we touch this area, it fails. So this level needs to break above on UMC. Another thing is that we have earnings on April 27th. So, this can potentially be, it might fall down to this lower level of the wedge and, bounce back up, but it's not looking too good for UMC in my opinion. It could be good, but those are the levels that need to break to the upside. All right, so XL, I alerted this stock a few days ago. I said that it needed to hold above 620, 628. Sorry, I sold as we crossed below that level. But what's been interesting is that we've been retesting this lower trend line this entire time. And even when we crossed below 628, we were adhering to this lower level. And then eventually we just crossed above. The other day when the SPY hit, like yesterday when the SPY was extremely bullish, that's when XL started making its move upward. And now, the MACD is now a bit overbought, but XL failed to make a huge explosive move. But yeah, the fact that we're trading outside of this falling wedge pattern and we're trading above 630, these are all pretty bullish signs. So again, as long as it's holding above 630, then you can just remain in this trade. and hopefully it works out for you, because I really, really love falling wedge patterns, and those are like my favorite patterns to trade. So as you can see, if you just adhered to the lower level of the wedge as support, it worked out really well. But I had a tighter stop loss at 630. So HEPA. So yesterday we were showing how this was also a bit of a falling wedge. Today we crossed above it a bit, but again, we crossed and we closed below it, which is a bearish sign. We're overbought. We crossed above, but we're overbought a little bit on the MACD. So now tomorrow the level that it needs to hold is going to be around 166. So 166 needs to hold tomorrow on HEPA. But the main key level of support is going to be 155. But this isn't a good sign, because when you are given a very bullish pattern, I mean, a lot of these patterns, they look very, very bullish currently, but they're all heavily dependent on the SPY, the QQQ, and the IWM, and the overall markets. So yeah, we had a little pop-up, but because the overall market, didn't do well today, that's why HEPA also fell. So I would keep an eye on 166 and 155. So SKLZ has major levels of resistance now. The 200 simple moving average is now acting as resistance, and the 20 exponential moving average is acting as resistance. So the 200 is at 1821, and the 20 exponential is at 1701. All right, so those levels need to break. But what's good is the 10 simple moving average at 1554 is holding as support. But yeah, Skills, it's not the best stock right now. It really just needs to hold, this level right here, which is the high. It needs to hold above 1684. But then we broke above that. I mean, we closed below that. So, but what I'm saying is if we open higher, right? Because we're higher in the post market. For me, like a tight stop that I would want to have is 1684 on Skills, because again, like it really all just depends on the broader market. So another thing that you can look at on Skills is that we did cross above this downtrend from February 5th, right? But now we approached the next level of resistance from February 5th, and if you connect that to March 16th. All right, so now we're trading exactly at that level here. So now the level that needs to hold for tomorrow on Skills is going to be 1905. Obviously that's very far away, but that's going to be the resistance for tomorrow at 1905. And yeah, for Skills. But yeah, there's not much. It doesn't really give you a good trade. It's trading at $16. There's support at 13, and then there's resistance at 19. So you're not given a very, very good, clear risk reward. Also, the MACD is very overbought as well. So I would wait and try to get a better fill around this lower level trend line or around 1355, okay, on Skills. So Amazon, it needs to hold today's lows at 3301, or it needs to hold at the lows from April 9th at 3288. Okay, so if we can hold those levels on Amazon, that would be very, very good, especially because we're extremely oversold on the MACD, and earnings is on April 29th. So we can hold potentially these levels of support. Another really good level of support is going to be this level here at 3279. So if this level holds, we consolidate a bit, and it would give potential room to pop up into earnings. So that could be really good on Amazon. So I would keep an eye on that level for Amazon, especially because we're extremely oversold. All right, FSR. The levels that need to hold on FSR, the lows right here at 1223. Let's check out the moving averages. We're trading below the 10 simple moving average at 1399. And the 20 exponential moving average is in confluence with this downtrend here from March 24th. So the level that needs to break for resistance for tomorrow would be 1518. But again, we are extremely overbought on the MACD, which isn't a good sign. It means that we can continue on lower. And I would be careful with FSR to the long side. You can trade along this trend line though. And if we break below it, you would have a little stop loss a bit lower. But again, the clear cut, the best opportunity would be to buy it as close as possible to 1223. All right, Berkshire B. Congratulations, Warren Buffett. This is in an uptrend, clearly. The Fibonacci level, it hasn't even touched the 23.6% Fib level, which is extremely bullish. You can see that the 10 simple moving average at 268.97 is acting as support. And the lower level of support on this trend line is going to be around 269. So as long as 269 holds, that can be very, very good for Berkshire B, and we can continue on higher. But the clear cut short opportunity on Berkshire B would be a break of this trend line. So if you connect the trend line from April 1st and you run it along the bottoms, the nice short opportunity would be once it collapses below this trend line. Right now, we're in a very parabolic move on Berkshire B and the market in general. So going long, it's not as huge of a reward as a sharp move downward. All right. So I would just be wary of those levels on Berkshire B. Hitty, this is a Canadian stock. It looks really, really bad. It needs to hold above 60 cents. We're oversold. We're overbought on the MACD. We barely even moved like past this support level. Even though we were extremely oversold on the MACD, which is a very, very bearish sign. So if we were to cross below this ledge, then we can fall down much, much lower. And I would be very careful about going long HITI. Unless you have a tight stop, the next level that we need to hold is 58 cents. But yeah, HITI does not look very good right now. Yeah, GVO, like same concept kind of. The level that we need to hold is 556. But if you were to buy it right now, that's like 50 cents away. And we're trading right below the 10 simple moving average. That's acting as resistance. We like bounced off of it. But yeah, GVO, it doesn't really look too good right now either. But it needs to hold above 556 support. So yeah, there's GVO. But yeah, I'd be very careful on GVO. All right, IDEX, we did a analysis on this a few days ago. So what acted as support before is now acting as resistance. So this resistance level is also confluent with the 20 exponential moving average right here at around 278. Okay, so now we're also trading below the 10 simple moving average at 260. So yeah, depending on where you got IDEX, yeah, man, I don't know. You can send me a message. We can talk about this. But look, we're about to cross above on the MACD as well. But I mean, which is a very bullish sign. So hopefully we can trade above. So the level that needs to break for tomorrow is going to be at 284. So if we can cross above 284, especially because we're about to cross above the MACD line, that is a very bullish sign. But it needs to cross above resistance. So usually when this happens, we see a bullish move, right? But yeah, we need to see something like that happen on IDEX. Otherwise, you need to have a stop loss at around potentially below this higher wick at 252. So yeah, those are the levels for IDEX. So Gilt, you can also see these falling wedge patterns on Gilt. We crossed above it, similar to XL. Let me go ahead and close this. We're trading below the 10 simple moving average at 981. So level that needs to hold as support for Gilt for tomorrow is going to be 952, which is this trend line here that we broke above. So 950 essentially needs to hold for Gilt. Yeah, I would be very careful if we start to fall down lower, because the next level of support on Gilt would be 913. Okay, if we fall below 913, then I would not want to be in this stock. I would sell it, because we can start flushing down, especially because I mean, one other thing that's potentially bullish is that we're about to cross above the MACD line, which is a very bullish sign. So depending on how tomorrow and how we react tomorrow on this, Gilt can continue on higher. But then it needs to cross above the 981 mark, which is the 10 simple moving average. So that's what I would be looking at on Gilt. NIO, again, like it broke down below, it broke above the downward trend line. So what happened is we broke above the downward trend line, we retested the lower level, and we crossed above. So now what's happening is that we are extremely overbought on the MACD and with earnings on April 29th. So I would be careful about going long NIO now. What you should have been doing, like it would be a way safer buy around $36. But now, you know, we're sort of like in the middle. It's not a great risk reward trade. What would need to hold now, what would need to break is essentially this level here. For resistance, would need to be this level here. So if we can cross above, what is this, 41.24, that would be very bullish for NIO. And if we can cross above this, consolidate a bit, then we can really hold these B bands up and start climbing back even higher. Okay, so I would be watching 41.24 on NIO. EZPW looks really bad. Today we crossed down below this support level that we've been holding this entire time since January 29th. We crossed below it, and it's not looking too good. All right, so now the level that needs to hold as support for EZP garbage is 491. So 491 needs to hold on this stock. Okay, if we start falling below, then, you know, I'm not really sure, but we are oversold on the MACD. Hopefully we can consolidate a bit, hold above this level, and then retest this trend line here. So yeah, we just have to keep an eye on that trend line. You can connect it yourself from January 29th. You connect it again on April 1st, and then you just extend it to the right, and that's how you would get this level here on EZPW. But yeah, it doesn't look too good right now. Also, because look at this, look at all three simple moving averages are at the exact same place at 519, 518, and 519. Look up here. Look, so that's not very good. You can clearly see there's a lot of resistance up there. So I'd be very careful for EZPW. All right, so VPT, it's trading in an uptrend. All right, the levels that need to hold for tomorrow are the 20 exponential moving average at 49 cents, and this uptrend channel here, it would need to hold above 51 cents. One good thing is that we are oversold on the MACD, which means that we do have potential to move up, but these levels need to hold at 49 and 51 cents. The next level that we need to hold is 47 cents. But yeah, those would be the levels of support. It doesn't look that great. It's still, you know, it really needs to just consolidate a bit, see what happens around these levels of support, maybe give a better entry below 50 cents. So on VPT. But yeah, so aside from that, there is my analysis for today. We can see Bitcoin bouncing back up, which is cool. Here's my analysis on the broad market on all of these different stocks. I hope you guys enjoyed it. If you enjoyed it and you're still watching this video towards the end, then, you know, you're the best, honestly. And I hope you guys have an amazing day. And thank you so much for watching.